You were listening to chartingwealth.com for Tuesday, the 5th of June, 2018. We see stocks are up for the day, bonds and gold are down. Of course, our book, Charting Your Way to Wealth, is available. Please make sure to buy yourself a copy to understand everything that we do here at chartingwealth.com so you understand how we read these charts on a daily basis. You'll see at the top right-hand corner of the screen right now a link where you can hit that. It'll take you to a video, and in the show notes of that video is a link where you can go to and buy, of course, our book. You can also find links at the website, and if you're a subscriber to our daily market review, you also have links there. And if you are a subscriber to the YouTube channel, there are links under all of our videos to purchasing both our book, Charting Your Way to Wealth, and the Stock Trader's Journal. Now let's jump right into these charts. If you remember, at the end of the prior week, we had a crossover going up on Friday, the 1st of June, on the S&P 500. It actually crossed over going up. And so far, we have a green up candle the first day of this latest week. This will be a whole week this week. If you recall, in the prior week, it was Memorial Day, so we had a shortened 4-day week. But so far, we have a green up candle. That's looking quite nice. We see stair steps as far as the derivative oscillator, and the price percent oscillator is heading away from the red signal line, going up, which is a good sign. As we delve a little deeper into the charts, go to the 2-day. You see that our 2-day chart is again heading up. We ended the week on Friday the 1st with a green up candle, and so far the first day of this latest 2-day candle is up. Derivative oscillator is holding its on, just basically sliding sideways. Price percent oscillator is going up, and we will go ahead and start redrawing our 2-day trend line, and price movement is above that. And as soon as we have this week closed out, we'll be able to draw a weekly trend line. We don't typically draw trend lines until the candle is finished drawing and we can actually make a true candle. Derivative oscillator, as we said, is flat, running sideways. Price percent oscillator is up on that 2-day chart. Let's look at that 4-hour chart. Of course, you had a jumping in point in the afternoon after that up candle in the morning. And if we look at the 30-minute chart, how were we looking around 10:30? Well, we were looking with a green up candle. In fact, jumping in around 11 would not have been a bad spot. Things ticked up since then, and again, an up day, up 0.48%. So either way you did it, either on the 4-hour candle or on the 30-minute candle, you did okay in a jumping in point. Again, this is a tough time of year to trade. The trades typically are more herky-jerky. I don't know if that's a real word, but you know what I mean. They're up and down and sideways. Typically aren't the long-running kind of trades that we get in either direction in the fall-winter trading zone, but fall-winter is coming as soon as this hot summer is over. That's the way it always is. And remember, in the summertime, typically it's much harder to trade because there's less volume in the market. Is, again, more squirrely and just harder to track, but that's why you need to practice. If you can do it in the summertime, you can darn sure do it well in the fall. So again, please make sure to be filling out your trade worksheets for all the practice trades that you're doing, your daily market worksheet every day, and your weekly market worksheet. We have free worksheets available there at the website. If you have any questions, don't ever hesitate to email us, cw@chartingwealth.com. That's where we are on the S&P 500. Back to the weekly chart and on to the Qs. Q, of course, it crossed over going up back on the 25th of May, right there toward the end of May, that week ending then. Of course, we've now got going into our 6th week of up movement. Up movement continues. We see nice stair steps in the derivative oscillator heading up, price percent oscillator heading up. Qs was up for the day 0.86%. And it's nice to see these charts again working in the summertime. So things still moving up, derivative oscillator up, price percent oscillator up on the weekly. What do we see on that 2-day chart? Well, we see things taking off again, which is quite nice. Derivative oscillator gaining momentum, price percent oscillator heading up. That's on the 2-day chart. And the 4-hour, same thing, heading up quite strongly over the last 2 days. Nice, strong up movement. things are looking good as the stock market starts to soar again. So hopefully you're in that trade and you're watching things take off. Remember, our jumping off point was there in the afternoon on Thursday, and things have gone up quite nicely since then on Friday and Monday. So again, charts are working quite nicely. That's the beauty and the magic of the weekly vertical crossover. Does it always work? No, it doesn't. But again, you follow the rules. You make sure that the 2-day and the weekly are going in the same direction. Then when that weekly crosses over going up, you look the next Monday, because remember, we only confirm those weekly vertical crossovers on Friday because that's when the weekly candle ends. You look around 10:30 on Monday, see if you have a jumping in point. If not, you look for one when that 4-hour chart crosses back over going up, as it did last Thursday after the weekly vertical crossover, and you jump in and you ride that pony. So things are going well so far. Let's keep moving through these charts. We go to TLT. That's the 20-year bonds. And again, 20-year bonds, we had a weekly vertical crossover going up back on the 25th. We had nice up movement over the course of this prior week, and we see that the derivative oscillator is still gaining momentum. Price percent oscillator heading up, not as strong as it had been so far the first day, and again, it was a down day of 0.76%. We have a red spinning top. That, again, is not a terminal candle. It's just the first day of a 5-day candle, but it does show some indecision to start the week off. As we look at the 2-day chart, we see that it is flattening out. Derivative oscillator up just a little bit. Price percent oscillator still heading up just a little, but we saw real slowdown on that candle for Thursday and Friday of this past week. We still had an open box, but it was red. And of course, this latest candle has penetrated the 2-day trend line. We had some warning bells on that 4-hour chart we'll get to in just a minute, but a red down candle. Again, it's just the first day of the latest 2-day candle, but it is a warning to us nonetheless, penetrating our 2-day trend line and a red candle. And then as we hone in to the 4-hour chart, of course, we see that crossover going down. We saw things topping out and starting to move over. Saw that happen on Friday morning, a little bit up on Friday afternoon, did not recover, of course, and then down stronger on Monday, penetrating in the afternoon that 2-day trend line. So we have some caution there and have been talking about that. Hopefully you rode this up and then you have been willing to pull the trigger on that to get out, or you're just continuing to watch and you're going to protect anything that you earned, or at least not gain a loss in that trade if it starts moving down strongly. Now again, remember, our weekly is still in an up move, as is our 2-day, so just be very careful with that 4-hour chart, and we shall see how these 20-year bonds will continue to move throughout the course of this week. Back to the weekly and on to gold. Gold, of course, has been in a confirmed down move since way back in mid-March, went up for a few weeks after that crossover going down, and then started moving over in earnest there on the week ending the 27th of April, and has really moved down pretty much since then. We have a red down candle starting our week off. Derivative oscillators gaining downward momentum. Price percent oscillator still heading down at about the same angle it had been in the prior week. We see on the 2-day chart the price percent oscillator starting to head down again nicely. And we see the derivative oscillator pretty much flat so far on the first day of this latest 2-day candle. Price movement is below the weekly trend line, so we'll continue to keep an eye on this. We have some concerns how things look like they bottom out somewhere around the 122.31 mark. Down movement for the day on gold, though, it's not much, 0.08, but it is nice to see it continuing to move in the right direction there. And what do we see on this 4-hour chart? What we've been waiting for was that jumping in point after the morning candle, a little bit up and then rotated back over, going down. Derivative oscillator gaining momentum. Remember, we saw this up movement in gold. It was the pullback, and we were waiting for it to cross over, which it did. Your jumping in point, of course, was after the close of that morning candle. For the afternoon down play, we'll continue to keep our eye on things. And again, you want to know what it is we're talking about here when we're talking about jumping in points and the theories that we have on trading and how to get in to the market. Those are based on our two primary ways of trading. The first is the weekly vertical crossover, and the second is a pullback on the 4-hour chart after you've had the 2-day and the weekly moving in the same direction. And then that 4-hour, after a pullback, turns back over moving in the same direction as the other two charts. When that happens, that's our jumping in points. More fully explained in our book, Charting Your Way to Wealth, and we would love you to have a copy of that. There's also a lot of great training at the website, and I encourage you to take those trainings also. They are absolutely free. And you have questions, problems, concerns, let us hear from you. cw@chartingwealth.com. Be sure to go to the website, put in your name, your email address, and sign up for free for our daily market reviews. They'll come to your email box every day these markets are open. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.